Hello again, everybody. Picture this, if you will. You're in a classroom setting, all right? And you've got some students to your right and you've got some students to your left, and the teacher here is in front of you. And the teacher says, all right, class, little experiment here for you. And he puts up this picture. And he asks this very simple question. Which line is longer? Are you serious? Isn't it obvious? You think, am I on candid camera? You start to question yourself. You know the answer. Or do you? Well, in today's Simon Says episode here, I am going to show you a couple of experiments. And one of them, the second one, is quite unnerving. But there's a lesson to be learned here. It's the psychology of it all and how we can use these experiments to become better investors, all right? So that first little experiment that I'm referring to is a real one, and I think maybe many of you know all about it. It was first developed in the 1950s, the Ash experiment. And now let's show a video of a real one, and this is from the 1970s. Now, we want to focus pretty much on the guy in the white shirt. See him there? Second one from the right. He's the subject. He's the patsy. He doesn't know it. Everybody else is in on it. So they go through a couple of these charts, asking which line is longer. Everything is looking good. They're all correctly picking the longest line. It's so obvious, but then this happens.
3.
3. 3.
3.
But on the third trial, something happens.
2.
2. 2.
2. 2.
The subject denies the evidence of his own eyes and yields to group influence.
Wow. I mean, I think that's pretty incredible. Think about that. Now you think, well, I would never do that. Don't be so quick to say that. In dozens of those experiments, which are still held today, roughly 2/3 will actually pick the wrong one with everybody else. Why? Because we don't like to stand out in a crowd. We don't want to be wrong just in case somehow we're missing something. Even when the data is right in front of us and is so factual, even if something said 2 + 2 = 4, and if everyone else is saying, well, it's obvious it's 5, something in our brain is triggered and we start to question ourselves. And we don't want to stand out. We don't want to be ridiculed. We don't want to have any chance that we could be called out as being wrong in front of everybody else. We would rather be wrong in a crowd than have any chance, slight chance though it may be, to be mistaken and be ridiculed by others. It's a fascinating experiment, and we can learn from it from a psychological standpoint in terms of how it applies to our investing habits. Things are happening always in the financial markets, and every once in a while, somebody is saying, hey, you got to get in with this. You've got to invest in ABC. You've got to invest in this sector. You've got to invest in that because everybody is doing it. Don't be the lone guy out there. Well, now we're going to go a little deeper into this and another experiment that honestly is a little grimmer, but there's another lesson to be learned here. This one was a 1962 documentary called The Milgram Experiment. Let's take a look here. This one got a lot of attention. I don't know how many of you perhaps have seen it before. That man in the white coat there, he's the expert. He's actually a psychologist conducting an experiment, unbeknownst to that guy sitting down there. That man sitting down is told to ask a series of questions to another guy behind the wall who's also an actor. He's in on this. We never see him. Every time that actor behind the wall gets a question wrong, he is zapped by this electrical current. Now, you should know that every time that the guy behind the wall gets an answer wrong, the subject guy who doesn't know this is some kind of crazy experiment is told to increase the voltage all the way eventually up to 450 volts. He is going to hear this guy, he can't see him, behind the wall, scream out, yell out in pain, I can't take this anymore, until at one point he goes silent. And believe it or not, because the guy in the white coat, who's the supposed expert, keeps telling this subject, you can't stop. Doesn't matter that he's not answering anymore. Doesn't matter that he's gone silent. He's not answering your question. Raise it again. It's unbelievable. Here's an example.
Here, 375 volts. I think something's happened to that fellow in there. I don't get no answer. He was hollering on less voltage. Can't you check in and see if he's all right, please?
Not once we've started. Please continue, teacher.
I mean, that is, like I said before, it's unnerving. Now, you may think there is no way you could be led to do that when one of your fellow human beings, and you think this is all real, you can't see him. He's on the other side of that wall. He's screaming out in discomfort, please stop, make this stop, and then go silent, and you would say, I'm not doing this anymore. This experiment showed that roughly half, 50%, of subject matters went all the way to the end, all the way to 450 volts, where the guy on the other side of the wall stopped making any sound. That is crazy and it's unbelievable. And thankfully, there is that other 50% that stuck to his core principles and said, I am not going to do this because it goes against what I believe. And by the way, the facts in front of me are so overwhelming. I don't care that I might embarrass myself and tell this so-called expert over here, I'm not doing it anymore. There is one of those guys we'll show you right now.
Incorrect. 150 volts.
Oh,
Sad face.
experimenter. That's all. Get me out of here. I told you I had heart trouble. My heart's starting to bother me now. Get me out of here, please.
Continue.
My heart's starting to
Continue,
bother me.
Steve.
I refuse to go on. Let me out.
I think we ought to find out what's wrong in there first.
The experiment requires that you continue, teacher.
Well, the experiment might require that we continue, but I still think we should find out what the condition of the gentleman is.
Now, as I said before, although the shocks may be painful, they're not dangerous.
Look, I don't know anything about electricity. I don't profess any knowledge, nor will I go any further until I find out if the guy's okay.
It's absolutely essential that you continue.
Well, essential or not, this program isn't quite that important to me that I should go along doing something that I know nothing about, particularly if it's going to injure someone.
So who do you think was probably a better investor? I know I'm kind of stretching this analogy out, but stay with me here. Let's say at the top of the internet bubble bursting in early 2000, who do you think said and looked at all the data and said, this is crazy, these internet stocks that don't make any money. All you have to do is put a .com at the end of your company name and you get all this investing capital. Yeah, and everybody else is doing it, and that's what I want to. It may go against all the principles I know about investing, but I want to be in the crowd. I don't want to be called out, and that's what I'm going to do. Of those two guys, who do you think is going to be the one who would say, no, I'm not doing that? It's probably the second guy. My friends, I know this is kind of dramatic what I'm talking about, but you have to know something as a professional investor for more than 3 decades who's been managing money for that long. One of the things that I have learned over the years is to judge the psychological makeup of the investing community at any particular time. I've talked about this before in other episodes about sentiment and things like that. Go back and check some of those out. But the psychological makeup where you can take the pulse of the investing public at any particular time will really help you in terms of, okay, does the market look a little toppy? Are we at the bottom of a correction? You'll never get it perfectly right. And I'm not talking about market timing. I'm talking about managing on the edges a little bit. Maybe it's time to take a little off the top. Maybe it's time to take a little from growth and add to value. Maybe it's time to add to bonds or vice versa. A lot of times you can get that answer just by looking at investor behavior at the extremes. A personal example, as someone who was managing money back in the late 90s and into the internet bubble bursting, I've always said, you know, the worst time in my career to try to manage money was actually back then. All these years later, '08 wasn't that great either. But 99, 2000, you had this proverbial little old lady selling CDs and buying .com stocks. I did not participate in that, and I lost some clients over it because somehow I didn't get it. I stuck to the core principles that I knew to be true for investing. You have to remember to do the same. So please remember those kinds of experiments. that will tell you, am I acting within my own belief system, my own core beliefs? Am I looking at facts, not opinions? These are facts. Those lines that we saw, it was factual that A was higher, or in that video, that other line was higher. It's factual that this guy on the other side of the wall is in distress and now he's passed out. Is he dead? I'm not doing this anymore. And you have to apply those same principles to investing, all right? You all know what I'm talking about, separating fact from opinion. I did a podcast before on that, talking about how the so-called experts are always consistently wrong every year when they make a prediction of where the stock market is going. Please go back and check it out. They're smart people and they're experts, but they are opinions and they're wrong. They are not facts. Know the facts in front of you. I'm going to put up this picture here right now. And this is one of my favorite too. And Carl Richards, we use him a lot. He's terrific. These, let's say, you're saying are all these different investors, okay? You're the green guy. You're sticking out. You can't be afraid to be different. So the next time that we get into an extreme situation in the market, you know it, you sense it. I'm also, by the way, not saying that you should bury your head like this and not look at the world. It's quite the opposite. You're looking at the facts of the situation and you're not listening to what everyone else is telling you to do. And by the way, you're also not listening to a so-called expert who is telling you to do things that you know don't match your own personal long-term goals and needs. Don't be afraid to not just be different from everybody else, but don't be afraid to be who you are and know your core beliefs and know how they stick with your own personal financial profile. That philosophy will never, ever fail you as a long-term investor. I hope this helps, folks. Please hit subscribe, pass it along to others who might benefit from this. I appreciate you checking in with me every week. We'll talk to you again next time.